This podcast is proudly sponsored by Gyro Drilling. They provide world-class drilling solutions for all types of projects. They specialise in auger, aircore and RC drilling. Head to the team at Gyro Drilling for all your mining needs and see how they can help you with your upcoming project.
So, hello, I'm Ben Kostrich, and this is the Market Bull podcast. Joining me today on the show is Paul Mulder, the Managing Director of Mayur Resources, which is listed on the ASX under code MRL. The company is focused on its projects in Papua New Guinea, and I haven't explored what the resource scene is like there. But today, Paul is going to be speaking all good things about it. So, welcome to the show, Paul.
Thank you very much for having me.
When I was looking at your background, you've had previous time at BHP, working with Gina Reinhardt, Hancock Prospecting, and have been as the managing director of MRL since 2014, so around 10-ish years. So I've done a little bit about your history, but talk to us about how much you've done within the mining realm and why you've now been here for 10 years and see such potential in this project.
So look, I've been in the resources game for 30 years now, steel, iron ore, coal, mainly the bulk commodities. And in that, the full phase of operations, construction and project development, a lot of the work is at the front end. Probably over the last 15 years has really been origination, looking at a very early stage opportunity and developing those through the phases: concept, pre-feas, feasibility, mining licenses, approval, environmental, cultural heritage, engineering, financial modelling, marketing, etc. So basically building that business case to demonstrate there's a good financial and long-term operational mine opportunity in the bulks. That's what I did when I was working with Gina Reinhardt, and that's what I've done here with Mayur for the last 10 years. I think the reason why I've been in Mayur is that our family founded the company, and from that perspective we saw a massive opportunity in Papua New Guinea, and the reason why we see that is because they're a nation so close to Australia, rich in resources, yet they import nearly everything. They import salt, they import paper, they import fuel, they import steel, they import cement. Literally everything is imported when all of the resources are in country. So we see the business opportunity as something that there's true benefit to be had by the Papua New Guinean people by displacing imports and servicing your domestic market obligation with raw materials that are downstream processed, that provide PNG jobs, people jobs, benefits, but also local supply. But because of the proximity in the Asia Pacific, particularly to Australia and other Pacific countries, there's a massive opportunity for the manufacturing sector, whether it be in cement and or lime or for that matter, even iron, which is the bulks that we're focused on, to self-sustain Papua New Guinea, but then see a large majority of exports occur. Now, obviously with exports, you're bringing in and building wealth. Rather than draining wealth through exports, you've stopped those. You're self-sustaining, but then you're actually growing an economy by exporting. And for us, we're a first mover in the bulks in PNG. There's been a big focus in copper, gold, a little bit of nickel, oil and gas. But from our perspective, we see that as, if you look at the thematic, Rome wasn't built in a day, and you're not going to build that in a day. And we all know that from concept, from an idea on a piece of paper to seeing something come into construction in the resources space, it's usually going to take you about 10 years. And we would have hoped to do it a little sooner, but COVID obviously played its part in that. But we're really ready with three key projects actually: the quicklime facility, the cement facility, and also the iron sands facility. So all of those are all construction ready.
Well, that's encapsulated really what MRL is. So we may as well just go straight into when I was researching lime and cement, and it's an area that, we see it every day, but we don't really know what the outlook is, where it's predominantly sourced from, and as you talked about, the opportunity within P&G to, instead of importing it, be a player in the market. So if you set the stage, really, I mean, cement and lime, I mean, what are they? Where do we use them? And what is the current real market for them?
So if you look at, let's break this down. So if you look at lime as an example, quick lime, you're taking high grade limestone. It can't be just any lime. It's very high grade pure limestone. You're putting it in to a kiln for 1,000 degrees. You're calcining it, and then you have quick lime. Now that quick lime gets used in a whole host of applications. People don't really see it yet, but they will soon as a true ESG mineral. And the reason you can call it an ESG mineral is you say, well, okay, as you asked, what does lime get used for? Lime gets used in water purification. It gets used to treat acid, sulfate, and acid soils by neutralizing it, because it's a neutralizing agent. It gets used in crop management. It gets used in roads. So rather than having to dig out a whole heap of material, go and source other material and fill it back in, it increases the CBR index of a road through road stabilization and strength in the mix. It also gets used as an additive also into cement. The other thing that isn't appreciated is other uses for it is also in things such as the copper gold industry. To extract the gold, you need to use it in lime, or battery metals. So if you look at cobalt, rare earths, lithium, all of those, and nickel, I think I already mentioned as well, all of those minerals at the front end require one thing. Well, not, it requires many things.
Few things,
But the common thread is it requires quicklime. So you want a battery metal for your renewable energy transition, no quicklime, no battery metals. And it's fairly binary. So from that perspective, it is, when you look at the energy transition and battery metals supply chain, it's a critical ingredient for those critical minerals. And that's the market. Obviously, the hype has been around, the up and the down of nickel, lithium, rare earths, etc., has been, that particular metal. But we're going upstream and saying what is required to enable that to occur. We don't have exposure to those metals, and that's not what we're specializing in. So lime has that used. Now, lime, we've got large number of users in Papua New Guinea in the copper gold sector, but also in the construction industry. And they are utilizing quicklime from imports from Southeast Asia. So we're talking hundreds of kilometers inland, where the source is being trucked or railed to an ocean-going port, and then several thousand kilometers to the coast. Our operation is what we would call in the golden postcode in PNG, which is right next door to the $18 billion Exxon facility, which is right on the coast. And the deposit sticks literally out of the ground 150 meters. No strip ratio. So very, very cost effective. Our distance from the quarry to our own private wharf is less than a kilometre on the same mining license. So it's a very integrated facility. So then you're saying, okay, well, thematically, why are producers going to source something that's 200 k's inland and several thousand kilometres away when there's something on their doorstep that is, less than a kilometre to their own wharf, and they can ship it around the Papua New Guinea country? Far cheaper and more cost effective, as well as supporting local. That then gives rise to, okay, you've got the likes of Adelaide, Brighton, large scale lime producers in Australia. We have watched over the last half a decade of their market share being depleted. That market share is being depleted by high grade Thai and Malaysian imports. Now, when you look at the proximity to our markets and the proximity from the Malaysians and Thais, we know we can compete on both the west and east coast of Australia. Again, that goes into our thematic of we're going to displace imports, service everything in PNG, but then we've got an export market, and who are we competing with? Lower grade supplies from the likes of Adelaide, Brighton, and higher grade supplies coming out of Malaysia and Thailand, which I've already explained their supply chain logistics. So for us, we see, there's going to be, the market breathes, there's going to be ups and downs with the energy transition. It's not as if nickel and lithium and rare earths and cobalt, etc., aren't going to be in need, because if that's the case, that means there's no more need for batteries, for solar panels, etc., which we all know is ridiculous. That's where the market's heading. So we're very, very comfortable and happy that we have quite a first mover advantage in the country of being critically integrated to one of those supply chains. We might not be front and center of that supply chain, but we are critical in that supply chain. We've seen cost profile of lime moving north significantly in Australia as the demand tightens, as the search for quality, not volume, value in use, and making sure you're getting the right quality. So that's I guess the thematic on lime. Now, some people go, okay, lime, what's the difference? So then you've got the cement and clinker side. So when you're looking at that, again, the project has two phases. It's the lime phase, and then it's this clinker and cement phase. Now, that clinker and cement phase essentially is a lower grade lime that has other impurities that you need in cement. And you have a lot of aluminosilicates, clays, iron corrective, as well as Marley style limestone. You put that into a furnace to about 1,400 degrees and you melt that. You drastically cool that and you get clinker. I'm obviously making this fairly simple in regard to explanation,
but more complicated, yeah.
But you're manufacturing that, and that becomes a clinker product, which is the round pellets that get traded all over the world. You then grind that product and you add a additive called gypsum, and you have then your powdered cement. And you go, okay, that's thanks for the 101 on the cement. That's great. Why is it important for Australia and PNG? PNG has committed to nation building, yet they don't have their own cement plant. Not one. They don't make clinker and downstream processed cement products. They import everything. So to build their nation, they're reliant on imports as at today. Now, the government has been very strongly supportive of downstream processing and our initiative to bring on and actually be self-sufficient to build their nation, as any nation would want to be. They don't want, what nation doesn't want to be self-sufficient to build its own nation? What builds a nation? Cement and iron. Without cement and iron, what are you building? What are you building with? Wood?
So like nothing.
So they're the stark realities in life. That you want to build infrastructure and industrialize a country, you do it with iron and cement. Okay, so I'm not going to replay the same thematic because it's the same story with lime. Everything gets imported, we're displacing it, creating jobs, and this helps build their entire country from roads to bridges to building at a much cheaper cement price than what they're currently importing for. It's a tick and a win-win. But the other benefit for us now, though, coming into Australia, and this is the strategy piece some don't want to hear and some will like to hear because it obviously has an impact on some because of what they've enjoyed for the last 30, 40 years in Australia versus what's coming down the pipe. Half of Australia's cementitious materials, and a lot of people will know this, half of the cementitious material in Australia, which is overall it's 10 million tonnes, 5 million is imported. So 5 million gets imported from North Asia. China, Japan, Vietnam, Indonesia. Those northern Asian countries are 19 to 21 days sail away. Australia to PNG, Townsville's 2 days, Sydney's 5, Melbourne 7. So that east coast of Australia importing all of that material is taking 3 times as long. So their supply chain isn't as responsive. Now, our product is a high grade, low alkali Portland cement that is going to be in high demand in the market. It's going to be in high demand because it's closer. There's a requirement for lower carbon style product. I can touch on if we've got time, as well as ensuring that they get something that's cost effective and cheap. So from our point of view, Papua New Guinea has a plan to roll out 60,000 kilometres of road, high rainfall, low lying areas, high traffic. Paved roadway designs are going to be absolutely instrumental in that infrastructure play. If prosecuted properly, not 1 tonne of cement would leave the shores of PNG because they'd use it all themselves. However, as they're ramping up to that demand profile, there's still obviously and will continue to be for some time a very large opportunity to import into Australia. So then we look at, okay, and you'll say, well, how are you going to compete? We all know that Australia's a export commodity-based nation. Lots of ships going out of east and west coast full of commodities, coming back empty. Coming back empty to fill back up. Those ships coming back empty, going past the east coast, can reposition into Port Moresby, into our wharf facility, pick up the product, clinker and cement, and go down to East Coast Australia. So then we look at what we want to be known for. We want to be known as the Pacific lime and cement supplier into the region. And in doing so, we've got a 400 million tonne resource that can do this for the next 50 plus years. In doing that, one of the key advantages that we've got over the incumbent suppliers in Australia, and I'm not going to quote specific brands in this instance, but we all see the pressure vessels and the tanks driving up and down the freeway with powdered cement in there, using national logos. In reality, half of that material is from North Asia. So they're buying it from another party, putting a margin on, charging in the logistics and materials handling. Our advantage is that we will be doing the same thing. We'll be having those same supply chains, the same silos, the same logistics supply chain in Australia. But the difference is we're buying it from a supplier, which is ourselves, not somebody else. So there's our competitive advantage. And we're 2 days to maximum 7 days sail away versus 19 to 21 days. So you start to look at that supply chain and say, these guys not only own their supply outright, they're 3 times closer and have just as good product quality, and it will be lower carbon than what the other providers are doing, because we'll be our endeavor is to attach carbon credits to high grade quality carbon credits that'll be independently verified to our unavoidable emission footprint of the products that we're producing. Now, it will take some time, but the other thing that PNG is very, very well known for is, you can look at David Attenborough's quote, some of the most pristine, biodiverse rainforest in the world, and it has been under threat from logging. And we've got a large commitment to ensure that we can, with the PNG government and landowners, conserve that. Part of that will be taking some of those credits and for those unavoidable emissions, attaching them to the product. So I'm trying to lay out the overall strategy so you can see why. You ask the question, why? Why have you been there for 10 years and doing what you're doing? And that's really how we're looking to prosecute and set up. Essentially, what we're trying to do is set up another Cement Australia and Boral, Adelaide, Brighton on the east coast of Australia, and then some on the west coast.
It's an incredible, well thought out, as you said, strategy from supply chain logistics and how it compete against other markets, the scale of the asset, and then not to mention the proximity. It just, there's so many ticks, and this is 10 years in the making. And then, as you alluded to, the hiccup of COVID. So on that timeline, the central cement and lime, the CCL is referred to in a lot of announcements, is sort of the big known asset. And when you're talking about, gradually building this thing up, and benefits for PNG is tremendous. And then, as you said, Australia, what sort of stage of that development are you at, and what really can we expect coming out? Like, what's the realistic timeline as to when all these things start falling into place and you do become this potential large scale Australia-Asia distributor of lime and cement?
Yeah, so look, we we're at the construction ready stage. We've actually started construction of the wharf facility that is going to service that. That is a major de-risking element for the project because we'll be able to bring in a lot of equipment, project supplies. It'll be the long-term wharf that will export around domestically and internationally, but that's the key item. Everything is approved by the government. We're sitting in a special economic zone that's been also approved by the government, which is, I didn't mention it, but is another strategic advantage because as a developing nation, with this sort of nation building capability, the World Trade Organization, when you look at what they're trying to encourage, this fits squarely with what's being done there. So I think there's obviously some other benefits in that realm as well, in that special economic zone, because you get fiscal tax incentives for investing in downstream processing. So for us, we see that as an opportunity. But on the specific timeline, we've made announcements in relation to funding, and funding partners come in for phase 1, which is the lime. Recently, there's been in the media, the cabinet of PNG has met, and the National Executive Council has met, and they've appointed a state negotiating team to finalise and close out arrangements for stage 2 of the cement also. So we're hoping to complete that in a matter of months, at which point there will be clarity in relation to when we can go into construction. Our objective is, as a minimum, to close the lime and cement with funding already announced. There's obviously some conditions precedent to get that funding released. In getting that funding released, we'd hope to close that out in the coming months. If you look at the runway for that, is where we should be capable to sell limestone rock, domestically and internationally, depending upon when orders come in this year, because that's a very small part. The quicklime kiln will take circa 18 months to actually build those kilns. The cement will take 24 months. For your viewers, just to be absolutely crystal clear, permitting, everything is done. It's now about solidifying the finance, working with the government just to finalise the arrangements around, the overall structure of the benefits, what supply, when we can supply to the PNG government or private entities, what will get exported, and all of those things are being ironed out as we speak. So for us, as you mentioned, 10 years in the making, it's something that we need to sort out in the coming months, and you can expect to see news flow in the coming months in relation to that.
And you said sales there, a lot of it will be going to companies or groups within Papua New Guinea, but are you getting approaches from companies looking for secured offtake agreements? Are you guys considering that potential down the future, or are you just going based on market price and then selling as it comes through? What sort of thought processes are happening there to make sure that you guys and, of course, PNG are in the best case position to capitalize on it and maybe alleviate some of the stresses in the fluctuations in prices, or is it just come as you go sort of sale? What's the processes there?
Yeah, so look, I think with any of these, with projects like this and the company that we are and the investors we have, is that these are typically project finance facilities that are set up. Financiers, the debt financiers will want to see, and we've been obviously well aware of that and made material progress in relation to the order book and offtake. So offtake and commitments as it relates to quicklime and also cement are pivotal in relation to wrapping the credit from the banks. The banks can say, how am I going to get paid? Well, it's through this offtake contract. What is the quality of that offtake party? What's their credit worthiness? All of those things have been considered for a number of years now, and we've been working with numerous parties in both in Australia and also in Papua New Guinea to firm those up.
Okay, that's good to hear. And this is again a massive project for PNG, and you talked about the importance of giving even communities access to work and skills and all of that. How is that going to naturally progress to quite a substantial team within Papua New Guinea as you bring in the community and get them more involved in this substantial project?
Mm. We've partnered with the Australian government in relation to a training program up there. So the training program gets rolled out to the local village people. So our commitment is that we employ locally. We do a competency skills matrix to understand who's today qualified, bearing in mind an $18 billion facility was successfully prosecuted by Exxon circa 10 years ago. There's a lot of highly skilled, trained people looking for the next opportunity. So there's that's happening. But in parallel with the skills of people, we're upskilling Papua New Guineans in the local area, in the villages that are associated with the projects, and using the Australian government initiative along with ourselves, we co-sponsor and fund the development and the training works that occur. So our expectation is threefold. Is one, we'll give direct jobs prioritized to the local landowning communities. Number two, they'll also get the opportunity for spin-off joint venture businesses. So they get to joint venture with other very credible parties for those typical spin-off businesses, security, transport, logistics, catering, et cetera, because we want them to also be able to set up, not just be employees, but also set up businesses that they can then also go and provide to other parts of the country. And the third opportunity in relation to that overall picture is also becoming involved in the development of their land. And seeing outside of just the Central Cement and Lime project, their land area, how can we also mobilize and monetize their land with them, because they obviously don't have the capital required. How do we assist them in a structure that ensures that they're legally protected, but at the same time, there's an opportunity to see that land and other opportunities get developed? So, I'm very keen on that. I think for this particular project, ESG-wise, we have a very, very strong social baseline that we've been able to measure. So all the demographics around income, employment, gender, mortality rates, et cetera, all of those things in the social baseline are measured. Now, they're not very good, as you could appreciate. The areas we're talking about don't have access to power. They don't have access to running water. They don't have road access to Port Moresby, even though they're 24 kilometres away. They have to get in a boat into the open ocean to just connect with the capital city, which comes with its own risks. So the basics for us is utilities of water, power, bridges and roads, direct jobs, indirect jobs, future development. Measuring that very clinically against a social baseline so we can measure and ensure that it's structured. Now, the other side of that equation is then making sure that the said benefits that are on a piece of paper in a contract are then actually executed to make sure that there is a structure to make sure that those benefits are getting to the people at the village level and being monitored, measured, audited, and reported upon.
It's an incredibly substantial plan, and it's good to hear that there's genuine, equations. They're not equations, just realistic what needs to be achieved, and that there's a measurable way of making sure that's beneficial to everyone. And you mentioned earlier there was another project. It was something to do with the sands, and I know that there's other parts of Mayur that are also simultaneously unfolded. You want to just quickly touch on that as well, because the cement and lime is really one of the massive highlights and the keystone or flagship, but you've also got other projects and assets in the portfolio. So do you want to briefly touch on those?
Yeah. So look, the other opportunity, when we put the bulk commodity play together, our other opportunity was iron and mineral sands. That's also on the coast, 230 kilometers northwest of where we are. It's at Orocolo Bay, and that facility, this is where country now also has an opportunity, whilst we'll export those iron sands and other heavy mineral sands and construction sand, the opportunity is there to actually create an iron and steel industry in the country, not dissimilar to the way New Zealand has done it. And that project is at bankable feasibility study completion level. It's got its mining lease, environmental permits, everything is granted. It is also construction ready. It's a smaller capital requirement. And we're working with a number of parties to finalize that. Now, that project has had significant amount of work, drilled 2,000 holes. We understand the geology. It's a very simple process. It's not like copper gold where you have a pit and you've got tailings and chemicals and management of wastes, etc. This is a very simple at surface mine where you're separating heavy mineral through spirals and then putting it over a magnet bank to extract the iron, and the non-heavy minerals are then further downstream processed, like zircon as an example. Those products, again, whilst they're not the flagship, they support the overall thematic of nation building, because if we do this correctly, if we're able to do two key things, one is build a low carbon lime and cement industry to build the nation and export. If we're then also able to build an ironworks direct reduction iron with iron sands, as I mentioned, New Zealand's got iron sands and it's done that for the last 40 years, used iron sands for its own development. That is the second plank in the nation building strategy. Again, it'll be a low carbon opportunity, utilizing carbon credits and other technology. Having done that, those two pillars of what builds a nation, cement/lime and iron, will be achieved. Now, that project is a smaller scale project. Will produce about 1 million tonnes of construction sand, 10,000 tonnes of zircon, and 500,000 tonnes of magnetite. That project is about a 9-month build, so it's not complex. Where quicklime's 18 months, cement's 24 months. This is a 9-month build, and we've received construction bids for that already as well. And we're working with a number of different parties, as I said, to develop that, but much simpler, smaller project.
Okay, and now looking to the future, there is a lot happening, and it's really 10 years in the making, and it's all methodically thought out and structured. And going forward, what can investors expect over the next 12 months coming from MRL as all this stuff comes to light, from funding to project approval to even construction updates? What's on the horizon for the next 12 months?
And look, the key focus here is the funding structures. Now that everything's been done, is making sure the funding structures are put in place to enable two things. One is to enable the initial construction works, which we'd be expecting, obviously, in the coming months to firm those up and start making construction updates, but also doing it in a way that doesn't limit the expansion capability of the projects. So I mentioned the word for around 400 million tonnes of resource, lime and cement. We can't lose sight of, like, quicklime will start at 400,000 tonnes. The raw high-grade resources, nearly 200 million tonnes. So we can go from 2 to 4 to 6 to 8 kilns in fairly short order, but actually at a much, much lower capital intensity, installed capital cost per tonne. And your viewers may say, well, how? Why? Because we don't have to set up the wharf, the roads, the bridges, the power
distribution,
plants, the quarry, the whole facility is set up. It's really a matter, and we've actually built the facility with expandability in mind. So in the next 12 months, we should be seeing construction well underway, subject to getting the financing in order and making sure that but doing so in a way that also paves the way that we haven't just thought about today and not thought about the expandability tomorrow. So that's all being catered for, because it's such a compelling thematic that the reality is, when you start to look at the numbers, there is no reason why in the future quicklime can't be at 1.2 to 1.6 million tonnes rather than the first two kilns, which is 400,000 tonnes. There's no reason why we can't be producing 3 million tonnes of powdered cement and clinker a year versus the phase one of just 1.5. The resource is big enough to accommodate that. But as I think I might have mentioned at the start, Rome's not built in a day.
No.
And the strategy is laid out, but the key here is it's not viewers looking at, there's going to be some other substitute that comes in. Nothing's going to come in the foreseeable future that will build nations as a replacement for cement. And if there is,
well said.
And if there is, I'd love to know about it. I'll buy shares.
Well said. The revelation around the world is some of these emerging economies need those basic materials. I think when you look to the West, the infrastructure and everything has been built, but there's this disconnect that, civilizations like PNG, India, Vietnam, a lot of these places are still moving and scaling up, and that requires ridiculous levels and amounts of cement, lime, iron ore, and these basic necessities before they plug in their electric car to charge. For those that are interested, it's a good little spiel. Those that are interested in Mayur and following the story and watching all of this unfold, how can they follow the company? Where can they go? How can they potentially reach out to you and ask questions and really get an understanding of, and really more than what we've talked about, if there is that?
Well, look, we've got obviously our inquiry line. You can go onto the website, have a look. We've been really head down, moving with our financiers to finalise this. I think we'll be coming out in short order with some more updates, etc. But from an inquiries point of view, having gone to the website, if you're not able to get the information that's required or you'd like further clarification, we're pretty responsive in relation to that inquiries line.
Fantastic. Well, I appreciate you taking the time to speak with me today on the show, Paul. It's a no-brainer, but I've never really explored the prevalence and really the thematics of lime and cement as these evolving economies really take flight. So thank you so much for taking time to speak with me on the show today.
Well, look, thanks very much. And I look forward to servicing Papua New Guinea, but also being that pressure tanker truck on the highway in Australia.
Thanks for listening to the Market Bull podcast. Please remember that the topics and stocks discussed in this podcast are not financial advice. If you enjoyed this episode, please make sure to like, share, and follow. You can follow the Market Bull on all our socials and keep up to date with global market insights.